Hey, good morning, everyone. Brian Hoops here, Midwest Market Solutions, Market Insider TV. This is our opening commentary. It's a Wednesday, September the 17th. Thanks for joining us this morning. We're going to take a look at our trading day ahead. I will be talking on RFD TV this morning, as well as Thursday and Friday morning of this week. And we'll be talking about, grain markets, livestock in particular, maybe talk about some outside market influences as well, as a sharply lower dollar yesterday helped to spur some buying interest and fun buying in good grain markets. So let's look at our overnight trends. U.S. dollar is a little bit firmer here this morning after a big drop yesterday, having a nice little bounce. Natural gas is seeing some strength while crude oil is backing off of its recent highs. Stock market has been very quiet last several days, currently down a few ticks, along with gold and silver lower. Corn and beans close higher. The night session higher, half higher corn, 1.25 higher beans, and wheat was mixed. Chicago a quarter higher, Kansas City down 1/4 cent as we end the night session. As I mentioned, 8:15 Central Time is my appearance time on RFD TV. Follow us on Twitter, Midwest Markets, and Brian Hoops, and make sure you visit our website, MidwestMarketSolutions.com, to sign up for our daily newsletters and our video series. So this morning we're seeing good rains falling across the Dakotas into Iowa, Minnesota, Nebraska receiving some rain, Kansas receiving rains this morning as well. Now that's going to slow down the harvest in those rain areas. On the plus side, that could give us a little bit of a bounce here. It is seeing rains later this week into the weekend in Kansas, as I mentioned, Oklahoma, parts of Missouri, where the winter wheat crop is trying to be seeded, and it is very dry. Ground is very hard in a lot of these areas that haven't had rain, so they're welcoming the rain, and that will help the subsoil moisture and get the winter wheat crop that's being seeded off to a good start for germination. FOMC meeting concludes today. Expectations are for a 1/4 point rate drop, with the markets really pricing this in already. There's a 97% chance of a rate drop. So markets really factored that in already. But the market will be closely watching is the commentary for signs of another rate drop in the future. What does Jerome Powell say after the announcement is what the key is in today's marketplace. So we saw this announced yesterday, and I think I wanted to mention it this morning. We put this in our newsletter as well, as a private agency in Brazil has estimated last year's crop at 170.3 million tons. Now that's significant because it's the monster crop. It's one of the biggest they've ever produced. Exports expect to be 109 million tons. Now, you look at last year, they exported about 98.8 million tons, so almost 11 million tons larger than a year ago. And why is that significant? Well, that's normally about what China buys from us each year, 10 to 11 million metric tons of soybeans, because they'd rather buy from South America, and they have a monster crop to get rid of and sell. China is buying exclusively from Brazil and from Argentina and ignoring the United States. So we are seeing this as a bearish factor for the marketplace, and keeping a lid on rallies. And if, in fact, we get some sort of a trade agreement, in fact, that is what's supporting our markets right now, as President Trump and Chinese President Xi are speaking on Friday in hopes to reach a trade agreement, which would really bolster U.S. soybean exports to the country of China. This week's cattle facts show list, it's down 4,800 head for a total of 212,000 head. That's supportive in itself, but cash trade is called softer this week. Packer margins have slipped. They're now $52 in the red. And so we're looking for that cash trade to come in lower this week. May not see it until Friday, as we have a cattle on feed report out Friday afternoon. That report is expected to be friendly to the front months, with estimates at 99% of last year. Placements look to be bullish at 91% of last year. We're just not able to place many cattle. We don't have many cattle to place. Markings look to be a little down at 87%. That comes out Friday at 2 o'clock, and we're starting to factor in the softer cash trade. Look at the October futures, about $7, $6.50 discount to last Friday's cash markets. All right. Have a great day, everyone. Good luck, good trading. This has been Brian Hoops. I'll talk to you again soon.